Greetings everyone. This is Jatinder Rishi submitting his video presentation for corporate accounting. Today we're gonna analyze the annual financial reports of PHP Limited, Santos Limited, and Fantastic Limited for the year 2019, 2018, and 2017. And we're going to be comparing those cash flow statements for each company across over for 3 years. Statement of income and statement of cash flow. Cash flow is reliant upon the exchange of money and the equivalent of capital. Given the fact that these announcements do not represent the company's capital, they still have a vital role to play in the market. The statement of income is the main budgetary report coordinated by most organizations. As its name suggests, an income statement indicates how much revenue the business has gained over a given time frame. The major sources and usage of cash. For BHP Limited, we found fixed resource transactions are a major source of income and continue to earn real money as a result of this activity. Cash application involves, and for example, the cost of material, redemption of debts, and allocation of gains. For Santos Limited, cash is a fundamental source of revenue for the development of the capital, and the use of money is made for securing repayment of debts, investments, and allocations of other expenses. For Fantastic Limited, there is no specific hotspot for earning cash. We found it generates an income from various resources, reimbursement of liability, and income of two essential ways in which money is allocated by the organization. The study found trends in cash flow. BHP Limited, the working capital has been reduced because of the liquidity is being decreased. With Santos Limited, we found increasing rise in real money inflow compared to previous years. Hence, it resulted in a decrease in the measure of depreciation and an improvement in organizational profits. Fantastic Limited, on the other hand, faces a negative monetary weight due to excessive industry rehearsals. Owing to this poor business performance, the money balance has gradually decreased. Now comparing the differences between cash flow from operations and net profits after tax for BHP Limited. Cash flow from operations includes the inflow and cash reciprocals within a given budgetary year to assist with any business activity in the company. NPAT in income statements have main revenue and cost disclosure capabilities to determine with the current financial year whether or not it is money or non-monetary transactions. Moving on and ascertaining the ability of the firm for the generation of cash. BHP Limited, Santos, and Fantastic Limited have seen a modest cash inflow, which has raised the capital costs of the partnership in the current budgetary year. These organizations also need an effective vital framework to enhance any income care. Talking about coverage of dividend payments by cash flow via operations. BHP Limited has implemented a crucial strategy to enhance its business activities, which has led to increase in the organization's job money inflow. This cash inflow combined with the benefits received and the organization's passion for investment. Accordingly, the company has sufficient liquidity potential to generate the profit, and again, it has been in the previous 5 years. Fantastic Limited, on the other hand, has faced poor income due to which no benefits have been paid by the company during that period. Our third company, Santos Limited, has seen an improved cash flow, but that has been due to its successful business activities, which has helped them to make a return to their stakeholders and investors. Talking about generation of excessive or excess cash flow from operations. So we start off with Fantastic Limited. As we've talked previously, it has seen a decreasing example of age of inflow of real money. It used its revenues received to fund the transit obligations and liabilities. Santos Limited made an additional payment of 2,550,000, which is used to pay off the advances made by the company and to pay for capital expenditure, whilst BHP Limited has earned more funds from the company than the firm needed to finance its obligations. The company has a budgetary balance of 17 million, of which 2,764,000 and 6,250,000 were used respectively for the modification of commitment and development of its services, hence enhancing its profit margins probability for its stakeholders. Moving on to usage of working capital accounts. The working capital of BHP Limited has decreased by 10.12%. Assuming appreciation for creditors, the company introduced a credit plan on sale and methods that increase the account of both account holders and lenders. Thus, rise in income and credit balance would be a significant impact on cash holdings. Major items which made effect, a vital and frequent component was fixed resources, choice of investment, depreciation, and other specific transactions. Santos Limited had a 2,738,000 rise in investments, which occurred in the year 2018 due to reduction in organization's profits. Fantastic Limited's revenues are impacted by the need to adapt as they face a trend which has seen it go towards a downward spiral. Capital expenditure trends. Higher capital investments has been seen in BHP and Santos, while Fantastic Limited uses profits to repay the balance of its loans, hence depriving any developmental investments. Net borrowing trends. If we see the net borrowing trends, BHP has limited but not gone to take out any loans recently, but has a 12.36% increase. Fantastic has raised a funding of 3 million as a loan to finance its capital situation. Next, working capital trends in BHP has seen a reduction in working capital due to current resources and higher liabilities in 2019. Financial strength and best for lending. This study has found that financial strength, it is better to lend money in BHP Limited, which has a strong cash flow, whilst companies like Santos Limited, even though they are making profits, the financial strength lacks behind BHP. The study also found Fantastic Furniture Limited needed to make more investments towards development and thus being able to increase its profits for stakeholders and shareholders. This would be the end of the presentation. Thank you very much.